Okay, and we are live. Good morning, good afternoon, good evening, good day. Just depends on where you are and when you are tuning into this broadcast. My name is Clara Lyons-DeVaughn. I am the broker owner of Lyonsview Realty. We provide residential, commercial for small business and nonprofits and property management services. We record live here every Friday at 9:30 a.m. Eastern Standard Time. So be sure to hit that share button, the like button. There's going to be some phenomenal information today, so you don't want to hog it all up to yourself. Share it with somebody else. I have an amazing guest today, my dear, dear friend. I have known her, wow, several years now. Miss Almitra Tankersly. Good morning, good afternoon, good evening. How are you?
I know. Well, it's morning over here. So whoever's watching, they probably watching in the midnight hours trying to get all the info. You know how it
Right.
is during the day. How are
Indeed.
you, Clara?
I am good. I am so good. I want to tell our audience a little bit about you. Miss Tankersley is an influencer known as This Gal Talks Credit. She is
Yeah.
the founder and CFO of Credit Fitness Inc., which is a coaching and consulting firm specializing in building 6 and 7 figure credit profiles for new startups, personal and business ventures. Credit Fitness provides ethical, aggressive credit opportunities for clients who seek restoration and building strategies through numerous credit platforms that best fit the client's needs. So, Miss Almitra, she began her career path majoring in the field of medicine, and to offset the cost of school, she began working as a personal credit repair specialist. She quickly learned that her career path was not to improve the health of people through the medical practice, but to improve their quality of life through credit fitness. And we talk about that a lot, that your wealth is everything, your health, your wealth, and your spiritual mindset. So I love this. Mitra holds a wide range of certifications, ranging from forensic loan auditing, financial literacy bridges to wealth from the Wharton School of Business and FICO. She is pro certified. Her personal experiences, high success rates, and heart for the people makes this dedicated mother of one the best in her field. So I'm so, so happy that you are here with us today. Welcome, 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 welcome. And
Thank you.
that says, tell us what's not in the bio. Tell us a little bit about yourself.
I know. So first, I must give a hats off to my new established official family in South Jersey for NARAB. I am an official member. Yay! I am so excited about that. I have no idea why it took me that long. I guess because when you associated with people, you think you're already a family. You already know how it go. You got to get the name to be a family or be official to get the bloodline. So I got the bloodline now. So
Indeed,
I'm
indeed.
excited. I'm excited about that whole integration. So if everyone wanted to really be like, meticulous about what's not in the bio, they can go to creditsetgo.com and they will see a little list of all the things that I have established over the years of almost 26 years of continued education. That's a long time, right? Hopefully
It's a
my
long
age don't tell. Yes, so I am.
You look absolutely fabulous. And turn your volume
Oh,
down just a little bit for me.
okay, got you. So yeah, is that better?
Hmm.
Okay, so I am really a person that has a heart for the people. You probably will not see that in the bio. It really comes out when I'm able to work with a person one on one, or if they're in a group setting, through workplace, through actual trainings that I've done virtually. Those are the probably best times a person will be able to see all the things that are in that bio. But nonetheless, I say all that to say I am a person first. And I say that because I think in the industry of finance, it can get super fine, like super not finite, but starchy, boring, dry eyes type thing. And most people have not gotten enough education or information on it to maybe want to be tuned into it for really long time periods. So I try to like make it what's the word? User friendly, and
Yeah.
something that is useful for a person to quickly remember what we may have talked about in the short few minutes that we may have had, or kind of got together on, and then be able to carry that into real life actionable steps, because that's where the rubber meets the road.
Most
And so with that, I have taken that personality that I have and then integrated into all the things that I am doing. So a lot of what you will be able to see from that interaction is me coming up with the answers for myself first, because I am a person that has been in business for a really long time and have seen many, many failures. But failures was really feedback for how I make the program better for those that I, work with. And
Mhm.
so, yes, I said 26 plus years is what I'm looking at, but that's almost like a doctorate, I feel. Because most times, if I was going to pursue a doctorate degree, we would have been like still in school or in practice or something to that effect. So I think I can kind of relate that to what I'm doing now. So with that being said, when a person does come across the pathways of credit fitness, they're going to get a little bit of personality, they're going to get a little bit of real life stuff, and then something that's going to be curtailed to their specific situation, because there's no real cookie cutter to this whole journey of building, establishing, using the credit, making sure you can protect yourself against your credit. So yeah, that's probably what you're not going to get in that bio.
Right. Okay. And that's a really, really good thing, because people have this whole um, myth. There's a lot of things they think they know about their credit, and most of the time
Yeah,
people say my credit is not good, and they really don't understand it. So let's like
yeah,
jump into the basics. So
yeah.
what are the categories that make up a person's credit score?
Yeah. So let me start off by saying this, because I think most people will just go through the whole, oh, it's 35, 30, 15, and 10, 10. They heard all that. But let me start off by saying
Yeah,
this. What makes up
maybe
the
they
credit
haven't.
score, huh?
Maybe they haven't.
They may have not, but before I tell them what that breakdown is, I really want
Okay.
to put it out there that the credit score is a measuring tool for financial institutions like banking, like life insurance, car insurance, health insurance. These are institutions that are going to basically give a line of credit for something, towards something, so you can have access to better your life. And what
Mhm.
most people, I think, don't realize is it's a measuring rod, yes, but it's measuring your
Mhm.
behavior that is being expressed behind closed doors. And because these institutions don't know who you are, they've come up with a very unique situation and system called the credit scoring model that generates a risk factor. And so even though we might go over the breakdown of what it like entails, we need to understand that if we have bad behavior or emotional issues that we haven't really honed in on, like go talk to somebody, go to church and really seek God, or, whatever your thing is, you're
Yeah.
probably going to always have the same credit scores that you have, because it's measuring your behavior with your life, which then
Mhm.
connects to your money. And I say that because, I mean, if you think about it, a woman's bag is considered a purse. And why do they call it a purse? I heard someone say because it's personal. Okay.
Well,
So if you don't have the right behavior with,
yes.
not when things are great, because I think that would be like, everything is wonderful on a sunny day. But
Mhm.
this is a really good, unique tool for the banking institutions to measure what life looks like for you when life hits the fan, when you
Yeah.
don't have a job, when you do have someone that may have passed away or you get sick or whatever. Like, how are you going to manage your behaviors, and what are we going to come up with in this credit score? So if I'm going to color it. I promise you, I'm going to color it, because I think I've heard
No, I think
all the
that's
behaviors.
important. Yeah, I think that's important. Hold on, my light is just making me crazy here.
Okay.
I think that's really important that you say, talk. It's still bad, but we're going to work through it. That you
Okay.
talk about behavior, because people think that it's out there, and there is no out
Yes.
there. It's
It's
really
not.
based on what you're
Yeah,
doing and what you're not doing, on a
yeah,
consistent basis over time, and I think I'm really glad that you brought it up so that people
yeah,
can personalize, that they can control
yes.
what
Yes.
happens.
And I say that because I don't want people to like overstimulate themselves about, oh, I gotta know the breakdown. I mean, yes, the breakdown, that's a good thing. That's a good start. Okay. Breaking it down is a good start. But
Mhm.
we have to internalize it. So when I say internalize it, I'm thinking on you being personal with yourself. Like, forget about what everybody else is doing or what you heard people teach, and all. Like, understand who you are. Who am I when I get stressed? When I get stressed, I am going to go get a box of Popeye's chicken, not now, but a box of Popeye's chicken, and I might just eat it all. I will be
Mm,
sick afterwards, but that
mhm.
was me making a purchase that wasn't so smart. Okay.
Right,
And
or
so
going
now,
out shopping or going out
yes,
shopping.
there you go. That's what I
Yeah,
mean by I'm going to color it for you. Because if you don't like recognize these behaviors that I would go shopping and I might do excessive shopping, meaning I still got stuff in my closet with tags on it, or I have
mhm,
things that, I just bought emotionally and never even looked at it, forgot I had it.
right.
Or if you're a person that gambles, I have come across clients that says, listen, I know I have a credit issue, but I'm gonna need to at least have $6,000 to $10,000 a month set aside for gambling. That's my thing. And I'm like, wow, never even like thought of that until I started seeing different behaviors, which helped me to like relate back to the consumers that I serve. That hey, it is not just about the breakdown. Okay, it is going to calculate it in a breakdown setting, but unless you understand your personal behaviors, you will just know the breakdown, but you won't understand what breaks you down to create and aggregate scores that might not be so
That
favorable.
part, that part, and also
Okay.
the people who want the quick fix. It's like, okay, fix it today, make it better, and then they go back to the same behavior and habits that made it the way it is in the
It's
past.
almost like knowing you should be using an application of super glue, but instead you use Elmer's glue. And Elmer's
Mhm.
glue is going to crack up. It's going to crack up and break and
Right,
be brittle, and you're going to be right back to square one, right?
right,
So
right.
I think there you go. You said forget it. Where's the closure? But yeah,
Bother
like
me.
I
Yeah.
said,
Sorry
I
about
I think I think what happens is we get too technical with it, and that's why it doesn't
Mhm.
stick. That's why we can't apply it because we're like, oh yeah, I know the breakdown. I know I gotta make sure I don't get a whole bunch of hard inquiries. Don't apply for too much. Don't let nobody pull my credit. Like that's yes, that's a part of it. But if we can internalize it more, especially as people in business, I think we would
Mhm.
be able to hold on to the basics of what the breakdown is once we
Mhm.
understand our behaviors, if that makes
Indeed.
a lot of sense, hopefully. Um,
I think it makes great sense, and I'm glad
okay.
that you brought it
Yes.
up because that gives people the framework, to think about this through,
Yes.
the lens to
Yes.
look through, the
Yes.
filter to look through
Yes, because
when you're
you have to remember this is a system that has been generated. By the way, AI has basically taken over the entire thing. So if anyone is just thinking, oh, I'm just going to have this credit report or profile, you
Mhm.
you would be like really doing yourself a disadvantage if you're going to leave it up to AI. Okay, so you have to look at this thing. I know it
Mhm.
makes you feel uncomfortable at most times, especially if you kind of went through the mud or you went through a cycle of life that just wasn't favorable. I get it, okay, but you might want to find someone that can hold your hand. We'll hold your hand maybe for a couple seconds, and then we're going to say, okay, let's pull up the bootstraps and let's tighten it up and let's go. And then
Right,
also
right,
understand, yeah, and then also understand your past doesn't mean that has to be your future. It
right,
recorded something, okay, and it's just
right.
like life. I mean, I want to ask people, has anyone experienced perfect life, perfect circumstances within the last 2 years?
No, no, it
Shoot,
changes
within
all
the
the
last
time.
6 months. Or within the
Yeah,
last 6 months, has life been super perfect where nothing just made you feel unruffled, like you were just great? I think that would
right,
be the best way to understand why your credit report would record 2 years of history, or even
right.
understand what has happened in the last 6 months, because it again is watching and measuring behavior patterns that will make a
Right.
banking institution say, hey, you're a good risk or you're a bad risk. Okay.
Right.
And I think that's why it's less than 1% of all people who are in the system for credit and scoring and profiles that carry a higher credit score. Okay. So I will break it down for you. I just wanted to kind of paint around this to give it some meat, because that
Mhm.
way maybe someone that's watching this will kind of remember, huh, I do overspend when I'm a little nervous. You might not even be worried. You might just be nervous. You just,
Yeah,
I don't know.
yeah,
I
we've
just
been
be
talking
nervous.
about that in some of the shows too, about,
Okay.
looking
Like
at
even
your
like with,
spending.
yeah,
Yeah,
because
looking
I
at
mean,
your
I
spending.
know
And
some
we haven't talked
investors.
about why you're spending what you're spending, but looking at your spending. But I want to keep going because there's a lot of areas I want to cover that you've
Okay.
got some
Okay.
great information.
Yeah,
But
so
yeah,
the breakdown would be, first of all, we talked about the whole why we would buy something, right? So when you buy something on credit, they're going to measure how you pay. How do you pay that term back? Do you stick to the terms? Do you pay when you feel like it? That would be something that they really want to see. So that would be 35% of the total aggregated score for the credit score. Okay. The
okay,
next part would be is your amount owed. So if you were given a large line of credit or a small line of credit, they want to know how much of that have you spent against what's available. Okay, so that's 30%. So already the two things that measures your behavior are the largest parts of the score, which is one of the reasons why business owners suffer so much, because if they are starting or if they are already in business and doing, making moves, as they would say, they're going to use their personal credit most times because it's the first thing available, and they're not thinking about the breakdown. They're like, hey, I'm at Home Depot or wherever store they at for home remods or whatever. I'm going to use
right.
this line of credit. And if they like points, they might say, I'm going to swipe it, right? But there's nothing wrong with doing that as long as they have strategy. So they can salvage 65% of the score that would be recorded to create that credit profile. We making
Right.
sense thus far instead of just
Yeah,
going
so there are
through?
two areas. It's how you pay it back and how
Yep.
much you owe in total. And
Absolutely. Against
that's
how
for
much you are,
65%
given as available credit. Okay.
as
And I
available
want to
credit.
say that how much you have available credit, because some people feel, well, I don't have any credit cards or I don't
Mhm.
have any debt. I'm in the mindset of debt freedom, baby. Okay. Well, basically, what you just did is everything is cash related and no one can record that. So your score is going to reflect how much of that they can say yes or no to as far as risk factors. So if you have no credit cards, you don't have any debts out there, more or less, you're probably going to see on the lower side of your credit. Okay. I know a lot of people don't feel
Mhm.
that way, but that's how they aggregate a credit score. Okay. So the next part would
Yeah.
be is the time that they've had the credit. Okay. I'm going to really kind of talk about two major products that are going to affect a lot of people, especially with now the changing of the guard and the administration. Student loans. Student loans, I would
Mhm.
say, is probably one of the oldest and longest types of credit products that I see on most credit reports. And they could be 15, 20 years on there. Some people, I had this I say had because they're no longer with us, but they were in their late 80s when they met me, and they said, I still have student loans. And I was like, wait, what? I was like, I don't want that life. Don't want that life. But they had told me, they said, yeah, I just kind of went with the flow. So I'm saying that to say that student loans will probably be the nail in your coffin should you not handle it right. So what I mean by that is if you do a refi on it, you consolidate that history that you've had with that other lender or servicer for the loan. Once it goes to zero, paid off, it will mess with the history of how long you had that credit. So a lot of times student loans can help a person have a stronger credit profile. But the moment you scratch away at consolidating, refining, all those things that they're now making people get in a corner about, like they're going to force you into the corner to do it. Um, you're going to probably see a drop in your score. Same thing with mortgaging. If you are getting ready to do a refi, The same goes, most people have their mortgages more than 5 years. I say anything over 2 years recorded on the report, and you start to, kind of tap away at refining, buying it out, whatever you're doing,
Yeah.
expect a drop in the score because you took away history. Yes, that's 15%, but
Okay.
then you took away the recorded part of payment history for all those years and how much
Mm-hmm.
you owed. Okay.
Got
So these are, yeah. So these are the things
you.
that we want to make.
History was what percentage?
15%.
15. Okay.
Yes.
Okay. And then
And
the
then,
last
yes. And then the next part is 10%. Okay. 10% is the type of credit you have. So when I'm thinking of the reports that I look at, I see people that might have a bunch of store cards. We got our Victoria's Secrets, we got our Staples, we got our the Costco, all the little store cards that people usually are offered when they're standing in line or because it's their favorite, whatever. What they have to understand is that if you only have a certain type of credit, it can
one.
either help you or harm you. Now, when I say help you, I'm talking about having a complete use of a little bit of fruits, a little bit of vegetables, a little bit of carbohydrate, like a piece of bread or
Right.
mac and cheese. Whatever you want
Yes.
to have, like little, a
Like
little
so
bit of
you have
everything.
cons- gas cards, department store cards, mortgage debt. What would be
Right.
another category?
Right. So I would say the best way is to kind of think of it as a plate. Okay. And if you were to just walk up, and I know somebody gonna say, well, I'm a vegetarian. Okay, that's, that might be a bad idea for you to have this idea with credit. But even with that, if you're a vegetarian, you still might have a colorful plate. Okay. You might not pick all green or all reds or all yellows. You're gonna have a little bit of red, a little bit of yellow. So like it's the same concept, having a little bit of everything versus just everything the same. Okay. So with that, you want to have an installment loan. You want to have at least 3 to 5 credit cards that are over $1,000. Okay. I say that because most people who do have just store cards, even though a lot of the store cards are banked by, let's say, Citibank, I know Home Depot is behind Citibank, Costco is behind, the Citibank is also behind that. But you want to you want to remember that if you're as a business trying to get access to more money, you have to show them that you can handle certain levels and styles of credit before they can just give it to you or give you more or higher limits. So having 3 to 5 credit cards at $1,000 or more, at least 2 years old, that's the history. That usually will help a person get a nice little nest egg to start building on. Okay. At the same time, you do not want to just have a ton of installment loans. There's no real behavior measurement that they can kind of measure you on because it's a set payment every month. So if you don't pay the payment more or less, and this is excluding from student loans for just a second, mortgage payments and car notes, if you don't pay it, they come back and get the collateral. So that's the underlining threat. Whereas
Right.
on a sunny day, yeah, you might be doing good in your credit and paying your bills. But if the crap hits the fan with credit cards, they're going to see, are you going to pay the installment loan over the credit cards, or are you going to still keep to the repayment terms? So that 15% length of history, that 10% of, what kind of credit you have, that's going to help them kind of bring it all in with the other part, that's 65%. And then last but not least, with new credit is 10%. So new credit would be considered, you see something, you have this old card, it's 29.99%. You hate the interest rate. You were told that you could get a 0% interest rate card if you change out, yada, yada. That would be considered new credit if you were to go and apply for it. And now you're applying for something with permissions of using and pulling your social security number to be considered for that. And as a repercussion, they're going to shave some points off. Now, of course, a lot of times you might hear all over the place, it's 5 points, it's 15 points, whatever the case is. It really comes down to strategy again, because if you were in the market to look for credit cards or a car or a mortgage, there is a certain window. There is a certain window. Credit cards, not so much. That's a different strategy, and we do talk about that in the classes that I can, definitely offer to your audience. But for the sake of time, we want to make sure that new credit doesn't get overused, because a lot of times people are shopping for lines of credit, especially in business. They're like, let me just go get a couple cards. And whether they do it themselves or they select a company that could do it as a profession, you just want to make sure you land with the right person, because having new inquiries applied to your report will not only shave away history, because, I think a lot of people say, well, I've had credit for at least 30 good years. But if you were to go through a funding process, you're not going to be 30 years old anymore. You'll more or less come down, sometimes depending on how they pull. Like I've seen some people go through programs and they pulled so many times that they're now almost 7 or 12 years old. Okay, so, and that's horrible. But at the same time, there is a strategy for that. So I want to make sure that we can paint the picture correctly of how this new credit can be applied. So again, that's 35, 30, 15, and 10, 10. I heard someone break this down a bunch of years, and it always stuck with me that way. It was like a song. But understanding that these breakdowns are never useful if you don't understand your behaviors.
Indeed. This is really, really very, very valuable information. And Miss Almitra has so much information. Y'all need to get with her so you can talk about your specific situation. But I want to get to the business side. We're about halfway in, but so I want to combine two things. You talked a little bit about it, what's considered, a good score for most financial institutions, and then also talk about the difference between that on a business level. Like, what's the difference between individual, personal, and business credit?
Yes. So understand that personal credit is born with you. If you have a pulse and you have a social security number or a TIN, you have a score, whether you haven't developed it or you had it, you tore it up, you ran it through the mud, run cycle, whatever you did, you have a score. If you are in business, you also have a score, whether you developed it or you didn't develop it. A lot of people find themselves in the unbanked or invisible banking. And I know you probably say, what's invisible banking? It means no one can see you. You might be cash heavy. You might do really good monthly in revenue, but no one can record that except for the banking part that you're doing. So you do have a bank score. On the other hand, we do break down what those levels are, because most people, it's, I don't know. I know I have something. I just work with it, right? Get me funded, Almitra. But you do have a banking score. So if all you have is money in the bank, and it's a million people online that will tell you how dumb that is to just have money in the bank, right? You still want to understand how it works so you can use it as leverage, because having money in the bank can actually still be used as leverage, especially for funding. So with the personal credit scores, with the business credit scores, they both have to be developed. They are on two separate platforms. One, we already broke down the payment, the actual breakdown of we call the FICO pie chart. Okay. We understand that breakdown, but on business side, those rules do not apply. It is a totally different rule. They really want to just understand how you pay. So whether you're doing great in business is great, business is bad, are you going to pay on time? That's how they measure that score most of the case. If you're trying to get funding or you want line increases for your business, that's when you will have to have these lines that you've used at a way lower percentage of usage, so that the available credit is more than what you use. And I know it kind of sounds like you got to have ID to get ID. It's sort of like that. But again, it's strategy, okay? Because people in business are moving super fast. Most of them don't have time to even breathe, let alone floss and brush their teeth. It's terrible. But nonetheless, nobody on this call, of course, nobody on this call, everybody floss, brush their teeth. But the thing is that there are strategies for both. Where we go wrong is when we're using our personal platform to support the business 100% versus using a personal platform as a bounce board, to spring off of to get the business started, because the personal is developed in most cases with businesses. And they might say, well, hey, my business doesn't have credit yet, but can you take a look at my personal just to see my behavior with that? So you'll understand how my behavior may be on business. And again, it's all a risk factor. Okay.
Yeah.
So if you have a personal credit profile that is doable of a 680, that's meaty, a strong 680. And what I mean by that is having a little bit of green, a little bit of red, a little bit of yellow on the plate. Okay. If you're a vegetarian. And then if you are a meat eater, a carnivore, you got a nice T-bone steak, you got some mashed potatoes, you got the gravy, like you done did some things with your credit as far as establishing very healthy lines that are, I would say, I'll say $5,000 to $10,000 limits. And I'm being very modest here because I actually helped my daughter who just, well, I'll say she didn't just turn 20, but she's 20. She makes me feel like she's 40 sometimes, but she was 18 when we started out with building her. And now that she's 20, she does have higher limits that most of the adults that I work with as newbies don't have. So it's really about the little bit of green, the little bit of red to be able to establish a very healthy, strong 680 or better to then be considered for larger lines or stronger lines on the business side through the same cards that most people are going for, Visa, Masters, the Amexes, those kind of cards. So it's about strategy and remembering not to cross-reference too much or leaning too heavy on the personal, okay? Because the personal, I always say, develop it in a way where it's like a boring profile, like you're doing a little bit of activity. But if you're in business, it should be heavily used on the business side, so that way it can make trigger points happen where they begin to increase limits without you applying or asking. Again, they're watching behaviors. Okay.
Yeah, it's really interesting that you say that. So, like a personal story for me, I didn't realize, you needed to. I thought I was establishing business credit when I opened up my bank account. They gave me a card. At the time, it was a debit card. It said Visa, but it wasn't. It was just deducting from my account.
Yes.
But I wasn't getting any traction from that. Like it wasn't really establishing credit. And here I am thinking, oh, I have business credit, when in fact I did not have business credit. And I think a lot of people don't realize that they have to be intentional about establishing business credit lines. And I was getting credit cards that say, open a business line. And I'm like, no, I don't want to, I don't want any more credit. So it's just like understanding, one, they're two separate animals, like they run on two separate tracks. One influences the other, but it doesn't impact the other.
Right.
And you have to like go out and necessarily apply for the business credit. And your company really does a great job of helping people strategize the best ways to do that. To maximize
Thank you for the plug. Okay, I see you. Well, let me say this, because I think sometimes people, even in the mindset of building credit for their business, they say, I have a business credit card. I have, a Capital One Spark card. I have a Business Blue, all the little business cards. But the problem that most people don't see until it's too late is the problem that most of the major cards do not report to the reporting agencies to create a score. That's super sucky. Matter of fact, the only time that they might see the business card report is on their personal. I know the Spark card will show up on a personal report, whether you wanted it to or not. It's not the best card to play with if you're starting to build business, especially if you got a Spark card that was for, 20,000 plus and you maxed it out because you were told, oh, it doesn't matter. The pay schedule is different. They only measure on how you pay. That's unfortunate that you would get that information too late, because your Spark card is going to be immediately placed on your personal report. And if you maxed it out, it's going to max out your line of credit with that particular line, which can then drop your personal scores 100 or more points. So again, it's all about strategy, and it's understanding what to do and what not to do when you're in business to get more lines of credit for your business. So,
Right.
yeah, I
One
think
of the things
it is what it
for
is.
me, I know, right? But like one of the things for me, like I guess the reason I didn't want to get any additional credit because I didn't know, like I felt like I didn't need it on the business side. So what's available to people by establishing and getting business credit? Like what are the types of things that they can do to enhance their business
Everything.
if they
No,
have
I
business
shouldn't say
credit?
everything. We're working on our
Just a
behaviors,
few
but we
things,
have
a
to
few
do this.
examples.
So,
Yeah, yeah. A
yeah,
few
so
examples. Yeah.
basically, what credit opportunities a person has is it's a fountain. It's a river that's free flowing. Okay, so if you think about the Schuylkill River here in Philadelphia, if someone was to actually put a blockage up at the top of the river, let's say in Conshohocken, the water's going to build up there, and it's going to be a trickle for everybody down in Philadelphia. Things will begin to stink. You'll start to smell things die off. I want people to start looking at credit that way. If you put the blockage and say, I don't need it, let's just put some sandbags down, we good. I got what I got. We got a nice little dam here, just holding it here. If anything happens, which it does in business, you will never be ready for it. You'll never be ready. You'll always have to prepare and get ready. You'll have to ask the bank for mercy. And most of the times, if you have not built some kind of history on payment, how much you owe, and all those good things, you get stagnated in that one particular type of credit. So my people who are doing heavy volumes in revenue, these are the ones that suffer the most because they might do 30K plus a month and they might have those revenue streams coming in every month, but because they never took the time to establish even just little things, like making sure that they have credit established on their personal, they will always be jammed into what we call high finance loans at 48, 47% interest. For loans that are not 30-day, ideal term loans, they are debiting their business accounts every single day. And it's with like they're going to take the money. It's not you pay, they're going to take it. So whether it's a daily debit, a weekly debit, some are 5 days on, 2 days off, some are 7 straight days, and it's for 10 months. You might say, well, what does that look like? Okay, I had a client that borrowed 40,000. 40,000 was what was given to them, but they had to begin as soon as they got the money. They would normally have a deposit for these type of loans. The money goes right into your account following day. That following week, it might, let's say, they got the money on Friday. On Monday, the bank is going to begin to take out $790 per day for the next 10 months on 40,000. That's the type of loans that most businesses get jammed in. Is it ideal? No. Can it still be
No.
useful if you understand strategy? Yes. Okay. Especially if you have to hire 20 people for a project. I have some people that have contracts and they're like, I got to hire 20 people right now. They might need that money, but their contract doesn't get paid out until 60, 90 days out. So they might say, yeah, it's expensive money, but I can hire my guys, gals. I get the project done. We're getting our invoice paid whenever it does. I pay these guys back and we're good. That works.
Yeah.
Same thing in my daycare, same thing in the home health agencies. Like when they're paid 60, 90 days out and now messing with the government, we don't know if they're going to get paid on time the way they say. This gives them an opportunity to not lose their staff, because if you can't pay your staff's not going to stick with you. Okay. So those are the type of lines of credit that they will always probably get stuck in. But if they use that as a platform, as a springboard, they can actually start building personal credit if they haven't done so already. Or if they have a little bit of credit, we can start visiting strategy to get them moving over to the ideal types of lines of credit. Okay. And lines of credit meaning LOCs. Okay. Because they are available, but if you didn't do anything to build it to get you there, you won't have access.
Gotcha, gotcha. So, we have about 5 or 10 more minutes. And what does your company do? Because I want people to understand, um, like what you
Yes.
do to assist business owners, to get the credit, to improve the credit, and to grow the credit on the business
Yes.
side.
Absolutely. So, as you have talked a little bit about my bio, I actually do work with businesses that are startups, and most cases they are already in business and they understand the need for credit. So, if you are a person that is looking for where do I start? Like, you know, you go to a store or a mall and you say, you are here. We will help you identify your location and then where you're trying to go. So that way you don't get lost in all the little distracting opportunities. So we can get you right there. If it's there, you're there to purchase buildings, purchase homes, or whatever, we're going to help you to find that location so you can go right there. We help you establish the profile. We help you to understand not the breakdown because we understand its behavior, but we do help you understand your opportunity should these strange behaviors come arise, because sometimes they can get the best of us. But we want to make sure that we can give you a plan of action so that way when you do get access to certain funding, that you're laser focused on making sure you have enough wiggle room to make mistakes, because you're going to make mistakes, but at the same time stick to the payment terms so you can keep building. Okay, we're not starting and stopping and you want to get off the ride. So that's the first part. The second part is that we do help establish lines of credit for individuals, not just for business, but for personal as well. Some people right now are probably experiencing a kind of unique season where if you were a loyal customer to whatever creditor you're with, through Master, through Visa, Amex even, you're probably seeing interest rates jump to 29.99% to some 39, you might say almost 50%. Okay, I'll just round up. So if you have those high interest rate cards, you've been paying on time, and you're making your payments, and you see $700 going to interest every single month for one card. I'm not going to mention what card that is because I actually seen one. You want to kind of consider your opportunity to get like credit lines that have 0% interest, where you can now transition those high balances over to those cards, not closing that card, but just moving the balance over so that you have about anywhere from 6 to some of them 18, 20 months even, where you can just pay on the card the balance down. And that gives you now more room to have all of your money go to the actual principal of those high interest bearing cards. Okay, we come up with strategies for that. In fact, I will even tell you that it's not about line transfers and all that stuff. We actually have a company that will give you an opportunity to pay off everything. It's a 2 week to 3 week loan. They knock everything down and then they go and get those 0% interest cards, and then they move all the balance. It's a very unique opportunity for a lot of people who are just paying the bare minimum and seeing no difference. So we help you do that. Again, the
Traction.
classes. The classes is where they can really understand the breakdown, because we could be here all day, and I love to talk credit. So we want to make sure that they can get everything that they need. And I took it a step further because I think a lot of times people don't want to be in a physical room because they're like, I want people to know I need that kind of help. So the virtual, it's kind of have the same attitude. I don't want nobody seeing me in the room and looking through the, okay. So we have something that's called private client. And private client will allow you to have a private client number as well as a private avatar, so that no one in the room who is attending as a freebie will see who you are, or just for the fact you want an extra layer of protection. Okay. So you can definitely find that at creditsetgo.com. I think it's in the bottom little line that's going under our little pictures. But yeah, I would really stress that you take this seriously, especially if you are a person that's holding on to a 700 or 800 credit score. And if you kind of like move on, you might really lose your score. And then for those that are in the lower end, because you are carrying higher balances, don't just write yourself off. I would say still have a conversation with someone. You can definitely reach out to us, and we can see what kind of strategy is available to get you where you want to be.
This has been amazing. It has been amazing because you covered so much information on both the personal side and the business side. So I do want to reiterate that this
Yeah.
gal who's got credit can handle you on either side, whether you're dealing with your personal credit or you're dealing with establishing or growing or improving your business credit. Both sides of the track. She can help you on either side. But also, I think what you started out with is behavior. We
Mm-hmm.
are creatures of habit, and it takes 21 days to change a habit,
Yeah.
so that it's consistent over time. and as you stated, there are going to be bumps in the road. There are going to be times when they're less than opportune, but people have the opportunity to always come out of their place, come out of a place
And if I
that
could
wasn't
add,
serving
if
them in
I
the
could
past.
add, if I could add to that behavior, I think we started our call by talking about how the differences in credit scores range from race to race. And this is one of the reasons why we launched Credit Set Go, because I myself, as an African American woman who works with African businesses, African American businesses, um, it, what we have a disparity. It's really bad. So if I could just kind of resort to this thing I'm looking at on my laptop, you can actually go to Investopedia and look this up under average credit scores. And you'll see that it breaks it down with Native Americans being at an average credit score at 612. For Blacks or African Americans, it's 627. Hispanics are 667. Whites are 727. And
What was the other
also,
one?
I'm looking up, say that again. Hispanics or
Go back
whites?
because you broke up a little bit.
Okay, so
Actually start at the
I'm
beginning.
gonna just do it
You were
over.
breaking
So
up a little bit.
Native American is 612. These are average scores. Okay. Blacks or African Americans, they are 627. Hispanics are 667. Whites are 727. And also, not in this chart, but I did look up that Asians run the top. They're 747. Okay. So you can kind of see that Native Americans and Blacks are on the very bottom of this opportunity. And although I know that there are many initiatives to, help affordable housing and living, um, we have a ways to go. And I did say that the average good credit score to even build credit for business is a strong 680. We see that Blacks and Native Americans are way under that. Okay. So this is why we have put this initiative out there for Credit Set Go, because we want to be a part of the help to the problem, to get people in front of their credit reports, to help them strategize and then actually do the work, instead of just saying, oh, I have to hire a credit repair agency, because you do not. AI is actually helpful in the way that it can help a person get some things done as well as see results, and then be in the room to understand, what do I need to add? What do I have to do to, put a little bit of green, a little bit of yellow, and a little bit of red on the plate to then become attractive for being bankable, so they can get the funding and financing that they're trying to get access to.
That's really good. That is really, really good. And it's unfortunate that as African Americans, we're still moving up the ladder of not only in credit, but in housing.
Yeah,
I think we're, yeah,
yeah,
40% of Americans own houses, and 80%, like 70% of whites. So it's like, you
yeah,
know, we're still moving up the ladder to build wealth. And that's what Financial Fridays is about. We're really here to help empower people, African Americans and all people, to do better, to build wealth,
yeah,
to have a better financial position. And so the information that you provided is very helpful. If you are dealing with you don't even have to be dealing with anything. Your credit could be absolutely great, but it's worth a strategy call if you want to get into the improvement and the growth phase
yeah.
with Miss Almitra, to move you to a different position and to further what you're capable of doing individually and also in your business, through your credit, through your business, um,
Yeah.
and
That's
moving
that's
forward.
actually a great plug. I appreciate you doing that, because like even with me, I do a lot of reading. I try to read a lot instead of scrolling. One of the things that I did come across even this week, MoneyZine is a online article for, just all things money. And they mentioned that 54% of all blacks either have no credit
Mhm.
or score below 640. And I paused like that because I was like gritting my teeth and I'm saying, wow, it's a lot of businesses that are being born in the African American community. How is it that they came up with 54% have either no credit or a score below 640? That's horrible, right? And at the same time, we got all these initiatives. Hey, let's help you buy a house. And most of them are not running to the border because, no pun intended, because there is no way for them to, like, there's no springboard for them if we have no credit and scores under 640. So that's one of the reasons why we want to, do that. And then also it talked about 28 million Americans are invisible. Okay, so you can go look up these articles because I'm just making this up. This is stuff that they just recorded within February. So the stats are real and it's going to get worse. It's going to get worse. I read another article where it talked about the Doge crew where they snatched away all the Social Security benefits and they threw 22 million Americans into poverty. Like,
Yes.
so, I mean,
Yeah, because they couldn't pay their bills. Yeah, they couldn't pay their bills when that money was taken away. So yes, it's a
listen,
real
I
thing.
mean, I think a lot of people don't understand what's really happening. I mean, whether it's a reset kind of thing, again, I think we have to be
Yeah.
more intentional to just look at the report. So even though they might say, I don't want to look at my report, I think you should. I think if you have tissue on the bottom of your shoe, and I'm saying this on there, you should look down and pull it off. Don't just walk through life with a thing
Yeah.
of tissue hanging from your shoe. So if they want to see a credit report and they're like, okay,
Mhm.
well, which one do I look at? I'll tell you this. We do have a third party that we do work with. If they're looking to see what their credit report is, they can take a look at it for free for 7 days. If you want me to share that, I can. But it will, allow them to see it so they can say, okay, all right. And then if you need someone to hold your hand, then I say go sign up for free. It's creditsetgo.com. Sign up for free, get the report, look at it. And that way you can say, okay, I'm shaking like a leaf, or I'm sick to my stomach, or you're overjoyed and you're excited. What's the plan? Because it's not just about having a
Right.
score, it's about what can you do with it that can either enhance my behavior to do great things to help my neighbor, not just hoard it to yourself,
Yeah.
but how do I connect myself with another working individual that's like-minded and we can work together and make our communities better, make our families better, and I think most importantly, make our health better. How about that?
Indeed. Indeed, for sure, for sure. So Credit Set Go, is that the best way to reach you, or is there other
Yes.
contact information you can provide?
Yes, creditsetgo.com is the actual campaign that we're launching. It is a free sign up, so I would suggest that anyone that is interested in becoming a part of that they do so now. We are ending open enrollment on April 18th, just a couple of days after tax season. And that way we can really jump into it. Your minds hopefully will be ready and active to get your profiles in order. So creditsetgo.com again is where you can go to peek around, see, check out the bio, all those things. I think you should definitely check out who's working with you. Let's not just pick people that has a exciting, I don't know,
Indeed.
following. I don't know. We need to like really start checking people's backgrounds so we can be in
Indeed.
safe hands. Yeah, so we can have
Indeed.
safe,
And
like
so, and then the
smooth
class,
transactions.
and then the class that you have, can they access the class through Credit
Yes,
Set Go? Okay,
yes,
great,
it's
great.
right at the top.
You're
And
gonna
as I
have
said,
your
it's
rep.
limited. Yeah, it's
Oh,
limited because we're going to be, we want to really try to help as many people and have an intimate setting. So we did have
yeah.
a limited space, and then we're going to cut it off, and then we'll do it again maybe later down the line in the year. But for right now, we're really gearing this for those that are super serious. And like I said, it's all about you just being intentional because I don't feel that confident about what's going on in the government where we can just say, oh,
We're
we'll
not
just
even
wait
gonna get
for it
into
to.
that.
Yeah,
Yeah.
I think we got to be intentional
If you
because even I don't know if you've been listening to the hearings, but with the whole Doge process of them getting access to our socials, and they even talked about how young the kids were. Kids can be kids, and I'm not saying anything bad about the group that's in the Doge crew, but if they're getting access to our socials and our banking information, I mean, people are people. I'm just saying. I'm just saying. So if we're not even just looking at our reports just to make sure nothing weird is happening, then we are doing
going,
ourselves a
yeah,
Yeah, we're
That's
giving
a
ourselves a
that's,
disadvantage for that.
yeah, people
Yeah,
should at least check their what's going on their credit score at least once a year,
yeah.
if not more frequently. But we're gonna have to wrap. We're at the top
I
of the
say every day.
okay. We're at the top of the hour. So reach out to Miss Almitra. I really, really appreciate you being with us today. I'm
Yes.
sure that our listeners have gotten numerous things of value during this time. Be sure to like and share this information with your family and friends. Um, Here at Lyonsview Realty, we provide you with expertise, solutions, and we provide you with ESP, which is expertise, solutions, and patience before, during, and after the sale. We assist sellers buy and investors build wealth in real estate, and professionals build careers in real estate. And having excellent credit is important to that. We also want you to have a Lions View lifestyle. And people say, what is a Lions View lifestyle? It's when you actualize your dreams into reality. It's the possibility of what is available when your life is in order, when your finances are in order, when your health is in order, and when your spiritual mindset is in order. So we invite you to come back. You can find us on YouTube. There is a ton of information there for you to build a lifestyle, a Lions View lifestyle in all areas of your life, because it's all wealth. Your health is wealth, your finances are wealth, how you take care of your body is wealth, and your mindset is definitely your wealth. We air live on Fridays at 9:30 a.m. Eastern Standard Time. Come back next Friday, and definitely reach out to our guest, Miss Almitra Tankersly, at creditsetgo.com. And I am so glad that you spent time with us today. And until next time, keep living your best, your best, your best life. Thank you. Thank you. Love you.